Give your debit card, sir. What? How is this even possible? Your debit card hands a criminal direct access to your retirement funds, not access to a credit line, not a pending authorization. The actual cash sitting in the account where your Social Security payment arrives every single month. And the people who discover this the painful way almost always shared the same conviction beforehand. My bank has fraud protection. I am completely covered. Your bank does indeed have fraud protection. What most people never realize is that fraud protection does not prevent the money from disappearing first. The funds vanish, and only then does the investigation begin. And while that investigation is underway, your mortgage payment, utility bill, insurance premium, and prescription costs do not pause for anyone. Today, I am going to walk you through exactly why debit card fraud strikes retirees harder than virtually any other group, the federal regulation most Americans have never encountered, and the straightforward account arrangement that can prevent a stolen card number from ever reaching the account where your retirement income lives. Before I go any further, I want to address the 3 reasons most people currently watching this will conclude that this video has nothing to do with them, because all 3 of those reasons are incorrect, and all 3 will end up costing you money if I allow them to go unchallenged. The first assumption is that you monitor your balance consistently, so you would detect fraud quickly. What you will actually detect is the damage after the fact. The money departs your account the instant the transaction posts. A skimmer device installed at a gas station you visited 3 weeks ago can generate a $2,400 withdrawal at 3 in the morning on the precise day your mortgage payment is scheduled to process. You will discover it at 9 in the morning when your phone starts ringing because that payment bounced. The second assumption is that your bank carries fraud protection, so everything is covered. Your bank does maintain fraud protection. What your bank does not have is a requirement to restore your money while the investigation is actively running. The inquiry comes first. Your account remains completely drained throughout the entire process. That investigation can legally consume 10 business days under federal regulation, stretching to 45 days when the transaction involves international activity. Your bills do not wait 10 business days for anyone. The third assumption is that this only affects people who shop heavily online, and since you use your card in person at familiar and trusted locations, you are not at risk. According to FICO data from 2025, more than 243,000 debit cards were compromised through skimming in that year alone, representing a 5% increase over the previous year. And skimming is by its very nature a physical attack. Gas stations, ATMs, restaurants where a server carries your card beyond your line of sight for 45 seconds to run it at a terminal. The transaction appears completely ordinary. You signed your name, and your card number was already duplicated before you finished your meal. Later in this video, I am going to walk you through the simple 2-account system that financial professionals quietly use for themselves to ensure that a skimmer can never reach the account where their actual income resides. Setting it up requires a single phone call. I want you to hold that thought as we work through everything else, because every problem I am about to describe has a clear and practical solution, and that solution is fundamentally the same each time. Now here is the reason none of this ever surfaces in a conversation with your bank. Every time you swipe a debit card, your bank collects a fee from the merchant who processed that transaction. The more frequently you swipe, the more revenue your bank generates. This means the branch manager who has greeted you warmly for 15 years has absolutely no financial motivation to sit across from you and explain that the payment method in your wallet carries the weakest consumer protections and the greatest risk of emptying your checking account. That conversation directly costs the bank revenue. So it simply never happens. That is not a conspiracy. That is a straightforward matter of financial incentive. And here is what compounds the problem significantly. In 2026, Congress voted to eliminate the proposed rules that would have capped overdraft fees at $5. Americans paid more than $12 billion in overdraft, and returned payment fees throughout 2025. The banks collecting those fees are the identical institutions that profit every time you swipe that debit card at a terminal. Here is the difference between your debit card and your credit card that your bank will never commit to writing for you. With a debit card, the money exits your account at the precise moment the fraud takes place. If you catch it immediately and report within 2 days, your maximum personal liability is $50. Wait beyond 60 days and you could potentially lose the entire amount the criminal withdrew. The bank carries no legal obligation to return anything beyond what federal law specifically requires. And during the investigation period, which can legally extend to 10 business days or considerably longer, your account remains exactly as empty as the criminal left it. With a credit card, the fraudulent charge never actually leaves your account in the first place. It sits as a disputed item under review. You owe absolutely nothing on it while the investigation proceeds. Every major card issuer operating in this country will reverse it immediately upon your report. You never lose access to a single dollar throughout the entire process. 2 cards sitting in one wallet. One of them removes money from your account before a single question gets asked. The other one does not. That is the complete distinction, and it is precisely the one your bank is not sitting down to explain to you. Here's the scenario that unfolds thousands of times every single month across this country. A 67-year-old retiree receives her Social Security deposit on the 3rd of the month. The amount is $2,710. She uses her debit card regularly for groceries, gasoline, and a handful of online subscription services. On the night of the 4th, a criminal uses her card number captured by a skimmer at a gas station she visited 2 weeks earlier to execute 4 separate purchases totaling $1,620 at retail locations in another state. She wakes on the 5th to find her account balance sitting at $451. She contacts her bank immediately and formally reports the fraud. The bank launches an investigation. Under federal law, the bank has 10 business days to provisionally restore her funds to the account. Some institutions do this immediately. A significant number do not. They are legally permitted to withhold restoration until the investigation reaches its conclusion. In the meantime, her automatic mortgage payment of $890 processes on the 10th. Declined. Her utility payment of $140 attempts to post on the 12th. Declined. Her supplemental insurance premium of $210 goes out on the 15th. Declined. Every single declined transaction generates an overdraft or returned item fee. At the major banks most retirees use, that fee continues to run between $34 and $35 per occurrence. And each individual creditor may layer on its own returned payment fee on top of that amount. By the time the fraud investigation concludes and her money is finally restored, she has accumulated $15 in bank fees, $75 in creditor fees, a returned payment notation permanently recorded in her insurance file, and 12 consecutive days of personally contacting every creditor to explain a situation that was entirely not her fault and that no one ever warned her was even possible. The fraud itself was not the worst element of this experience. The financial infrastructure collapse that spiraled outward from that single fraud event was the worst part, and every single piece of it originated with one card connected directly to the account where her income lands each month. This is the point where some viewers will convince themselves this scenario still does not apply to them because they maintain reserves and keep a few $1,000s set aside as a cushion. If that describes your situation, I am asking you to stay with me for the next 5 minutes, because the approach I am about to explain is not exclusively for people operating close to the financial margin. It is for anyone who has no interest in allowing a criminal operating in another state to determine the precise timing of their financial disruption. And the entire setup requires one phone call. The strategy is called account separation, and it is the method people working inside the financial industry have quietly relied upon for themselves for decades, while simultaneously handing debit cards to everyone sitting across from them. Here is exactly how it functions. You maintain one account as your primary account. this is the destination where all of your income arrives. Your Social Security deposit, your pension payment, your investment distributions, every incoming dollar flows into this account. You do not provide this account number to merchants. You do not swipe a debit card connected to this account at gas stations, grocery stores, restaurants, or anywhere a payment terminal could potentially be tampered with. This account is where your money lives, and it is exposed to the outside world as infrequently as possible. You then open a second account, a dedicated spending account carrying its own separate debit card and maintained at a deliberately low balance that you replenish periodically by transferring from your primary account. You place $300 into it at the beginning of the week. You use that card for routine everyday purchases throughout the week. If a skimmer successfully captures that card number, the criminal gains access to whatever amount remains in the spending account, $300 or less. Not $2,710, not your complete monthly income, not the account your automatic payments are scheduled to run through. Even more effective than a low-balance spending debit card is replacing it with a credit card entirely. Not to carry a revolving balance, not to accumulate interest charges. You use the credit card for every purchase you make. You pay the full statement balance each month on the due date. Every transaction processed on that card is protected under the Fair Credit Billing Act. Zero liability. Immediate reversal when fraud is reported. And your checking account, the one your mortgage, utilities, and insurance payments run through automatically, never encounters a merchant terminal at any point in your daily life. If you prefer not to use a credit card because you have concerns about the temptation of carrying a balance, the two-account debit strategy functions equally well. The underlying principle remains identical. Place a barrier between the account where your income lives and the account that interacts with the outside commercial world. A criminal who skims your spending account card walks away with $300 and an inconvenience. A criminal who accesses your primary income account walks away with your rent payment, your electric bill, and your medication budget for the month. I want to address one additional point directly before moving forward. Some of you are currently thinking that your bank already provides a zero liability policy on your debit card, and therefore you are fully protected regardless. Here is the reality of what that policy actually represents. Your bank's zero liability debit card policy is a voluntary internal policy established by that institution. It is not a federal law enacted by Congress. The Fair Credit Billing Act protection that applies to credit cards is a federal law. Your bank cannot modify a federal law through a quarterly earnings announcement. Your bank can modify its own voluntary internal policy at any moment it determines doing so is in its financial interest. Banks have previously restricted, narrowed, and attached new conditions to their voluntary zero liability policies, and they will do so again whenever fraud-related losses climb to a level that demands a response. The customers who depend on a voluntary bank policy rather than a federal statute are one internal executive memo away from discovering they are having a very different conversation at the branch than they expected. There are 4 specific circumstances where a debit card remains the genuinely appropriate tool to use. I want to be precise about each one, because the objective here is not to encourage you to discard your debit card entirely. The objective is to deploy it only in situations where it makes practical sense and nowhere beyond those situations. ATM cash withdrawals at your own bank's machine represent the first appropriate use. You are withdrawing your own cash directly, not transmitting your card number into a merchant processing system. Use your body to block the keypad from view when entering your PIN. Before inserting the card, spend 2 seconds examining whether the card slot appears loose or visually inconsistent with what you normally observe. A legitimate ATM card reader is firmly secured to the machine housing. If anything shifts when you apply gentle pressure, walk away immediately and use a different machine or conduct the transaction inside the branch. The skimmer risk at ATMs is genuine but entirely manageable with 2 seconds of deliberate observation. Small local businesses that do not accept credit cards represent a reasonable second exception. Pay only the minimum amount necessary for that specific transaction. Use the spending account card exclusively, never the card connected to your primary income account. Government payments and utility bills where the processing agency charges a credit card convenience fee of 2.5% to 3% represent the third appropriate situation. On a $200 utility payment, a 3% credit card surcharge costs you $6. If that identical payment processes at no additional cost on a debit card, the debit card is the sensible choice. Use the spending account card for this purpose, not the card attached to your primary account. Any business actively offering a cash or debit discount represents the fourth situation. Apply the identical rule. Spending account only, without exception. Here is your complete security checklist for every debit card you currently keep active. Real-time transaction alerts configured for every single transaction the moment it occurs, not a consolidated daily summary delivered once at the end of the day. One text message the instant your card is used anywhere, for any dollar amount whatsoever. The second any transaction appears that you did not personally authorize, you know about it immediately, rather than days afterward. Call your bank today and confirm this alert system is actively running on your account. If it is not currently enabled, ask them to activate it before you end the call. A daily spending limit reduced well below your bank's automatic default setting. Most financial institutions automatically assign debit spending limits ranging from $500 to $1,000 per day. Contact your bank and request they lower your daily limit to $200 or $300. This does not prevent you from completing larger planned transactions, which require a simple advance authorization call. What it does accomplish is ensuring that a criminal in possession of your card number cannot execute $900 in purchases across 3 different states before the sun rises. Never save your debit card number inside an online retail account profile. If that retailer experiences a database breach and your stored card information is exposed, your checking account is effectively the breach. Enter the card number manually for each individual transaction, or inquire with your bank about virtual card number options if that feature is available on your account. Review your complete account activity every 3 to 4 days without exception, not on a monthly schedule. The 60-day window established under the Electronic Fund Transfer Act is not a generous or comfortable time frame. Identifying fraud in Week 7 places you squarely inside the zone where your personal legal liability begins expanding considerably. 3 minutes every few days is all that is required. Open the banking app. Scan the most recent 10 transactions displayed. Anything you do not immediately recognize, call your bank that same moment. And one concluding rule that applies without exception every single time you stop for fuel. Never swipe a debit card at a gas pump under any circumstances. Walk inside the station and complete the payment at the interior register, or use a credit card at the exterior pump. Gas station pump skimmers account for a disproportionately large share of all debit card fraud cases reported annually to the Federal Trade Commission. These pumps sit completely unattended for extended hours at a time. Modern skimming hardware has been engineered small enough to install within the internal pump housing, completely invisible to any external visual inspection. Using a credit card at a gas pump costs you nothing additional and permanently eliminates the single highest risk swipe location in ordinary daily life from having any connection to your checking account. Here is the complete picture of everything covered today. Your debit card operates under a different and materially weaker set of federal consumer protections than your credit card. During an active fraud investigation, your money can remain completely inaccessible for up to 10 business days while your automatic payments continue processing and fee charges begin accumulating. Your bank's voluntary zero liability policy is not a federal law and can be modified or withdrawn without any advance notice to you. The account separation strategy requires a single phone call to establish and permanently removes your primary income account from exposure to any merchant payment terminal. And there are exactly 4 situations where continued debit card use genuinely makes practical sense. ATM withdrawals at your own institution, businesses that do not accept credit cards, government payments carrying credit card convenience fees, and cash discount situations. Use it deliberately in those four specific contexts. Replace it with a credit card or a low-balance dedicated spending account for every other transaction in your daily life. Send this video to one person in your life who is still routing their Social Security deposit and their everyday purchases through the same single debit card. That one share could protect them from losing $2,710 next month and spare them 10 days of exhausting phone calls to creditors while their bank completes an investigation they never saw coming and nobody ever warned them about. That is exactly what this channel exists to accomplish. So I will see you in the next one.